It's March. That means we have a rate hike this month. We know on March 11th, the taper ends. Then we're going to have the rate hike, and then the Fed's going to start work on the balance sheet, whether it's the end of March or the beginning of April. Now, we did hear from Jerome Powell twice this week and the Fed Beige Book on Wednesday. The takeaway is we'll plan on interest rates to go up 0.25% versus 0.5%. A couple weeks ago, the market had pretty much baked in it was going to be a whole 0.5%, maybe even a full percent. But because of the uncertainty with Russia and Ukraine, it's changing the trajectory, and now we're planning on 0.25%. In the meantime, we have a lot of jobs data this week. It shows that the economy is continuing to move forward and very strong. Unemployment rate down, ADP private payroll up. You have jobless claims down. I think the only miss was income, where it changed like a cent. Other than that, super strong. So normally rates would be having a lot of pressure. They'd be going way high. But because of the uncertainty with Russia and Ukraine, it's staying lower than where we'd normally be. And let's just take a moment in the meantime, a round of applause. This is the first time in 2 years I haven't had to talk about the uncertainty with COVID. It's about Russia and Ukraine. Very interesting how that changes, but I'm glad that I don't need to talk about COVID anymore. So in the meantime, you guys be safe, and I'll talk to you soon.